Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we are taking a look finally at LVMH UY, the US version of Louis Vuitton. This is the pinnacle of luxury companies. They own 60 subsidiaries with over 75 brands. They have my personal favorite in clothing, Loro Piana. They own a lot of watches. As followers of this channel know, I love my watches. They have Zenith, Tag Heuer, Hublot, Bulgari. They also have a lot of wines and drinks, the best alcohol, Hennessy. They're also the owner of that brand as well. But then there's a number of other luxury brands that they at least own a stake in. Hermes, they own a stake in. They also own Givenchy, Christian Dior, Fendi, and so on. I'm not going to list all 75 brands, but clearly there's a lot of brand power there, especially in this luxury space. So we're going to go through this company and see how they're doing. I'm sure they have amazing margins based on the brand names that they carry, and hopefully they got a good balance sheet and everything else and are worth buying. So I'm coming up with a fair value of 214, discounted cash flows of 166, current price of 136. So it's at a price that's worth buying. It's below the margin of safety. Could be worth getting into. Earnings yield 3.56%. Pretty good, kind of low. We want earnings per share of $6.82 for what we're paying. And we didn't get that in 2023. 607, but this year should be 695 according to analysts. Next year, 792. So we will be there this next year. Cash flow is pretty strong, double digits, 12.3, usually around 16.2. And dividend, decent dividend here. Payout ratio is getting a little high, paying out 2.1% this last year, on average 1.3. So I wouldn't expect them to grow it a whole lot more, but there's a bit of room. ROE, incredible, almost 25%. The equity is a little high, 1.33, not a massive deal. I'm sure that there's a lot of debt going into buying these brands, and if they're strong brands, that's fine. ROI, 11%, that's really good. And ROA, 10.6. Again, this is probably one of the best companies we've seen for returns. Debt to equity is really the only red flag here. Debt seems a little high, but again, they just acquire brands. Margin-wise, came in this last year, 68.8%, usually 68.6%, so on par with what they typically do. And then net, 17.61, usually just shy of 18. So that was a little bit lower. Looks like expenses came in a tad bit higher than they typically do. Growth over the last 3 years, they've seen a compound annual growth rate of 10.3%, but it has slowed down quite a bit in the last two. Looks like they had a huge boom in 2020 and have kind of stayed at that level. That's not a huge surprise for the brands that they own. Analysts are projecting going forward some decent growth, though, 12.3% in the next year, and in the next 2 years, 10.5%. So we're going to go with 11, kind of in between those two for our thesis. Share count, they are constantly buying back shares to a small degree. 0.2 would be less than we've seen them buy back previously. It would be nice to see that, but they could definitely come in with more, but this is a pretty safe option. We are going for the safer route here. Cash flows. Cash flow is down from where it was in 2020, flat over this last year. But if we want to see them hold the current cash flow yield, they need to come in on par with revenue and growth in the cash flows. So 10% here would get them to 11.8. And that'd be a continued decline in cash flows. We can take a look here and see it did level out. It's kind of on its way back up as of the end of 2023, and we'll see how things go. With that 10%, this is what we'd be looking at. So even in 2025, they're on par with what we saw back in 2021. Assets, they are growing their assets very well, about 4.7% in the last 2 years. 6.7 in the last year. So 5 is definitely a fair estimate here. And liabilities, growth of 1.9 almost 2%, and 3.8%. So 2.5, again, in between, a fair estimate. Dividend, they've got some decent dividend growth. It's not double digit. I'm not surprised. They are getting kind of up there with their payout ratio, but 7% growth does seem like it is possible. And if you were to buy in at today's prices, it would give you a yield on cost in 5 years of 3%. You'd be making $4.04 per year in dividends. And margin growth, I wouldn't expect anything massive here. They have good margins as is. 1% growth would be pretty fair. I wouldn't expect much of a decline. I'd hope that they can shore up their operations a little bit more and drive the net margins up with such strong gross margin. This thesis is giving us average annual growth of 9.5%. And once you factor in dividends, you're looking at about 11.6%. So buying in at already undervalued prices, you're looking at some really good returns. In 3 years, the fair value for this stock would be somewhere near $232, and in 5 years, $278. And once you factor in the dividend into those, you are sitting on very good returns. 78% compared to the market's 26%, 3x market returns. I think right now the share price is low because there's kind of recessionary fears and a pullback in luxury spend. But they definitely have brands that would survive a recession. I'd keep my eyes on this because it may continue to go down within a recession and create an even better buying opportunity. I mean, we can see that in the last year, it's been as high as $191. So it hasn't even reached its fair value in the last year. Now we can go over to the prices and see how things are trending here. We see down here at the bottom, the earnings are one of the lowest factors here for the valuation. Big pullback in 2022. The fair value is the next one up on a very good trend from here going forward. And then we have the dividend on a decent trend, kind of flat. I think soon enough, this might be one of the lowest valuations here. Then the actual share price, not super well correlated with anything. Everything kind of trends in the same direction, though. From 2020 to 2021, everything seemed to be up for the most part, aside from the cash flows. And then a bit of a pullback. And we can actually go and look here at the price breakdown and see what's going on. We can see the average lows in the stock here. So back in 2020, a very good buying opportunity, $91, as with every other stock, though. I'm just trying to see if there were any. 2023 definitely doesn't look like it was a good time to be buying the stock. 2024 right now, it's lower than it was in 2023 on average. From 2020 to 2019 to 2024, the average across the board, high, low, open, and close, are all somewhere between $133 and $136. And the current share price is $136. So clearly we're in territory that's not unknown to the market. They seem to be okay with these prices. Next up, we have the balance sheet, which is a very good up and to the left. And then cash flows, they pulled back from 2020 through 2022, flattened out in 2023. And as we said, we'd like to see them going up going forward. So now we can do everyone's favorite, the worst case scenario, and see if they severely underperform, will things be okay? Is it still worth buying at today's prices? And usually we just go with what's the worst that we've seen out of them? Compound annual growth rate of 3% on revenue. This share count's actually reasonable. I'd say nothing. I do not expect them to issue any shares. Cash flows. I mean, we've seen them lose 11.7%. Assets, 4.7. Liabilities, 3.8. Remember this, we want the higher number for the liabilities. Dividend, 7's fair. I mean, 0 would be they just don't raise it at all. I mean, the absolute worst case scenario would be that they cut it. And then margins, let's just say a 1% decline in their margins. And this gives us annual returns of 1%. After you factor in the dividend, 3.3%. But you're getting in at such a good price that you're still getting 50% returns over the course of 3 years off of this. So if this is a long-term situation here, this thesis plays out for 2 to 5 years, it'd be awful as an investor. I mean, at least it's not negative. If you were losing out annually, that'd be one thing. But in this kind of situation, yes, we're coming up with 50% returns because you're going to end up with a fair value of $196 at the end of the 3-year period, and you're only paying $136 for it. But is the market really going to take the stock up to $196 when it's bringing in an extra 1% in value every year? Unlikely, but there are meme stocks. There are stocks that there's a lot of hopium for. So it's definitely possible. Best case scenario, I think what we already put as reasonable is what we're going to get. But 10.3 here, share count, buyback, 0.3%, not 30%. Cash flows, I mean, best case scenario, it comes in line with revenues. Actually, this should be 12.28. That's what analysts are projecting. Assets, 6.7. Liabilities, we're just going to go with 2, round that up. Ooh, dividend, I'm not going with 67%. That'd be insane. I think this 18.7 is going to be insane as well. It'll take you to a 5% yield over the course of 5 years. That's not as crazy as I thought it'd be. 2% growth in margins, double what we originally put. And you're looking at having the stock be half off right now, essentially. 100% returns in 3 years, 168% returns in 5 years. So a stock I like. I think it hits the criteria that we look for. Debt to equity is the only thing that's really out of hand here, but they are just a massive conglomerate who's just buying up brands. So it takes debt. And with the great margins that they have and the good returns that they've got, I don't think it's too worrisome of debt. So it definitely hits my watch list. I wish they were an American stock. It'd be easier to purchase. You can't buy it on Robinhood. I haven't looked on LVMUY. I know you can get it on Public. It's on my watch list there. I'm definitely keeping my eye on it. I'd like to see it go lower. It's really close to its 52-week low right now. So if there is no massive recession, things will probably start turning back around, and you might see a $60 gain instead of a $60 loss on this thing over the course of the next 52 weeks. I want to thank you guys for watching. Please like and enjoy the video. Comment what other stocks we should take a look at, and subscribe so you can stay up to date with everything. And I'll catch you next time.